John. Thank you. I messed up again, right? Almost. Oh yeah. Every day. I gotta do it automatic, right? As soon as it opens up, I open the webinar. I should start recording, something like that. But yeah, I'll tell my son to do that. Hopefully, he'll do it. So now the thing is that any pair you open, and then how do you do? What is going to be the real approach for that? That how do you do your analysis and try to understand the pair? Now, what moves the market is the news, right? The news moves the market, and not the technicals. Technicals are just the roadmap that where you're going and where to. Right from where you're going and where to you're going. So from A to B, point A to point B, what is the starting point and what is the destination? So this is what we try to find out, and then we get in the move, and then we get out before it ends. As soon as the move starts, we get in and get out. So the one and only tool or instrument that we have to measure these moves is the Fibonacci tool, right? And you all know that, the Fibonacci tool. So how do we use the Fibonacci tool? You all probably have learned already. So if you use that tool properly on the proper chart, you can literally know that if we go up, where are we going to go? And if we go down, where are we going to go down? Because we don't know if we're going to go up or down before the news, right? That's why we have on a Forex Factory, we have the whole calendar. These news are scheduled on a daily basis. Some today maybe USD news, and they are tomorrow pound news, and day after tomorrow yen news, right? So they give a chance to each and every pair or currency to move, and then those people can trade that currency or pairs of that currency. Now, here, using the Fibonacci tool, when you open a pair, so let's say we're going to open this pound yen, and we try to see what the heck is happening in this pair. So starting the monthly chart, first of all, look at the monthly chart that, usually I give you, those charts, right? Monthly and weekly. So you look at it, and then you see that, okay, this is what it is, 56, 57, and we're supposed to go up if news give us a favor. If the news is in our favor, we will go to the upside. If not, then we might break to the downside. 56, 57 goes down to 48, 87 on these, 47, 95, these numbers, right? But ideally, is like maybe we will go to this number. If yen gets weaker, we will go to the upside, or pound gets stronger, we will go to the upside. Then you look at the weekly chart, the more clear picture, more, like a detailed picture that this is what's happening. We are just sitting just above that 58.21. That's a very, very key number. But are we going to go up or are we going to go down? Who knows, right? So what do we do? So we will come up with some kind of approach using the Fibonacci tool, see what it is, and we prepare ourselves. It doesn't matter. If it goes up, we will be following it. And if it goes down, we will be following it. But how? And how positively we can follow that. So we go down to the 40-minute chart, and remember this number 58.21. So you draw that number 58.21. Where the heck is that 58.21? 58.21 is right there. So write down that number that you have weekly high, 58.21. Weekly high 58.21. For as of now, this is the most important number. If we stay above, we can go up. If we go down, we go down. Right? And then few numbers to the top side, few numbers to the bottom. You can write down these numbers, just for quick reference, right? If not, then you will say, what the heck is that? What the heck is this, right? So write down the numbers. 56, 57 is right there. 56.07 is there, right? So write down those numbers to the upside, few numbers to the upside, few numbers to the downside of that current price or very close area, right? Now, second thing is that check the last move and draw the fib. See what happened. Now, we all know the few patterns, only few harmonic patterns we need, because those harmonic patterns, I'm saying harmonic patterns, I'm teaching harmonic patterns, but actually Those are Elliott waves, excuse me. Those are Elliott waves, right? Other harmonic patterns, they come up with some, every corner, they have a pattern, right? You have pattern here, you have a pattern here, you have a pattern here. What the heck? So they don't work. They're like, they're basically, at our level working. They just give it a name, right? But the harmonic pattern that I concern about, like, Gertley, bat, and butterfly pattern, those are basically Elliott wave, giving it a name, different way of look at it. That's it. A Gertley pattern, for example, if I have it open here, no, I don't have it open here. So I'm going to open it quickly so that I can explain it, and then we're going to look for that. Oh, no, sorry. Okay, so a bullish Gertley pattern, for example, is like this, right? And specific calculation. Bad pattern has a slight different calculation, and my birthday pattern has a mixed calculation, right? Then the other pattern is a butterfly. These are Gertley and bad patterns are retracement patterns. When you have a move, right? So the price makes a big move, then it retraces. This is the retracement fashion. Big move is from X to A, then it comes A, B, C, retrace, right? Then it makes a big move again, and then it retracement comes again. And different areas, the retracements are different, the levels and the calculation are different. Wave 1 or wave 3 or wave 5 or wave 2 or wave 4, they have different calculation. But bringing those Elliott wave into the harmonic patterns make life a little bit easier. That's it. For example, this Gertley pattern has mandatory pullback is 61%. Then it goes up to 23% line and then comes to 78%. Simple. 3 steps, right? So we try to, and what we have to do for this to analyze that if we have this cooking is draw a fib on a length, any length, the latest, the most latest length. So for example, we go back here and we see that this was the length finished, the latest one, and then now this is undergoing, right? So now if we pull the fib from here to here, and then we see that we can't see nothing. It's just going up there and it's staying at 50%. Then what? Right? What the heck? All right, no problem. So now we put the fib to the previous length, which was from here to here. So we pull the fib from here to here. Remember, pulling the, let me do it from the beginning here. Always remember that the draw the fib always in a forward mode. Like from this point, never draw the fib in this way, always in this way. Now from this point, this way or this way, never go backward, right? So from here, we're going to measure this one. So from here to here, not from here to here. So we draw from here to here. And now we start thinking that, okay, do we have anything, any pattern or anything cooking here? So now I have something open here, the Gertley pattern here. Let's say the butterfly here, right? And bad pattern is just a slightly different, but let me open it up anyway. Where the heck is that? Okay. This is like a bad pattern. It has a slight different calculation. It's 50%, and then here D point is 88%. B 50%, D 88%. Gertley pattern, on the other hand, has a little different 61% B point and 78% D point. Right? C stays the same, 23% line. Commonly, a little bit up and down, but it's okay. And then butterfly pattern is an extension pattern. It's extended pattern. It's an extension, means the price, the D point goes beyond the starting point. Right? Starting point from here, it goes up there, but D point goes and bypass the X and go to 127 or 161. So these are the 3 patterns. So we're going to try to look one of these if we have, and if we can find, because these are basically, in other words, are Elliott wave. So we're looking for an Elliott wave, right? But in this fashion. So let's say, now if we draw the fib from here to here, so this become X, this is A, then B, is we noticed that it came all the way and hit the 78%. What is this recipe for? Is this for Gertley, B 0.78%? No. Is it for bad pattern? It's only 50, so that's not it. What the heck? Which one? Is this one? So this is point B. It says that XA point B should be 78%. So, okay, we have something cooking here, right? So we have this drop here. But then what is next? Next is this pattern says that the price goes usually back to 38 or maybe sometimes to 23%, right? In case of BAT and 61, 90% of the time is 23% line. In case of butterfly, 90% of the time it is 38%. Because of the pullback to the downside is much, much bigger than the move to the upside is a little bit shallow. Instead of going all the way to 23% line, it just gets stopped at 38 and then drop because the selling pressure is much, much higher than the buying pressure, right? So we noticed that this is 78%, and right now, currently, we are getting stopped at 38%. Is that the ideal situation for this pattern? Yes, we are at 38%. Now, who can give me the guarantee that it's going to make the turn? No one. There is no guarantee. It can continue to go to the upside. What will be the reason? The reason would be the fund is the news, right? The catalyst is the news. Either pound going to give us a good news or we're going to have a bad news for yen. If yen gets weaker, this thing will go up, continue. Or pound gets good news, pound gets strong, will go up. But just the opposite is possible as well. If pound gets bad news, you're going to drop. And if we get good news for yen, you're going to drop. That's one thing. And that's the scenario that this pattern here is cooking. So if we can get a reversal candle here on a 40-minute chart, then you can jump on the 20-minute chart and you might find a short setup here somewhere, which you're going to take. Where to? We have the calculation that the pattern says, okay, if in that case, usually it will go to 127% or 161% if we break the 127%. So 127% of this one, if we go down, is right there. And there is another level here, 5607, which we saw on a weekly chart. Where the heck is that? Right there, 5607. So it can drop here. Yeah, very nicely, very easy. It's possible. Or it may go all the way to 161%, which is right here, right? But forget about this one right now. Let's concentrate on the first thing first, 127 or 5607. That would be the target. 5607, let's say 56. Right now we are at 5860. That's 260 pip. If we get a reversal, are we really going to in that area? If we are, then how many pips that we have? Possibly in our hand or in our bank, right? Maybe not in one day, but possible, because these patterns you see all over the place. They are made, they're cooked, right? They happen. So why not this one? That's one thing. This is between this. This is a perfect calculation for a bullish butterfly, actually. It's supposed to be finishing here and bounce, and you're supposed to trade then. But you know that me, it's a little different, right? I'm a psycho, and I create new things all the time. So my way of trading is that from C to D is 280 pip. You think that it's a wise decision to just sit down and watch dropping 280 pip and not doing anything? I want my share out of that. I want 200 pip out of that from 280 pip move, right? If that pattern is to be made, we have that in our hand. So why not trade that first? And then if it comes here at point D at 127 and bounce, we will trade that as well. But first thing first is coming down here. So this is point C. I'm going to go for point D. That's first scenario. We have it, right? So we draw these lines that, yeah, okay, if this is what it is, then we're going to drop here for 127, or we might go even to 161 for a bit bigger butterfly. It all depends on the fundies. If pound gets weaker, if we can take out that in pound index, the big number 50 to 60, we can easily go all the way to the downside, right? Even a lot lower than that. That's forget about that later. But this one is to the downside. Now we measure this length, then we measure this length, so we come up with this. So, okay, that's one possibility. Keep in mind, have it in, record the chart even, right? Draw these numbers, write down these numbers, and record the chart. That's one thing. Now go back even one length further back and draw this, the fib on this length, and see what the heck is happening. Do we get something else on this time? So we draw this number here. I mean, this fib here on these levels. This is the high, this is the length, right? Then we notice that the price went and exactly touches at 61%. Aha, that is not the butterfly calculation. That is something else. What is it? This is a, anybody? Can anybody tell me what the heck is that? Where my chat thing go? Okay, tell me if 61%, this first pullback of this move, 61%, what kind of pattern we can have? We can have only one kind of harmonic pattern we can have with the 61%. Come on, someone, man. You mean Ranjit, I just told you. Hello, are we connected? Or everybody sleeping? Okay, now that means you're learning, bro. Good, John. Very good. Butterfly. No, no, John. No. The butterfly pattern has different, bro. Here, this is the butterfly pattern. The first pullback is 78. But what if we have this at 61%? Oops. What the heck? Why I have those two? This is what it is. Yeah. If B point is at 61% and makes the turn, the only pattern you can have is Girdley pattern, right? Or my mixed pattern. We're not talking about that, Berkeley, right? But the possibility is for a Girdley pattern. Now, Girdley pattern calculation is that from 61%, it will go back to 23% line. And if it makes the turn from there, it will go to 78%. And at 78%, the Girdley pattern will be finished. Complete, it means, right? So what's cooking here, if you pay attention, that the first pullback was 61%, so we can think of a Girdley pattern might be in the making. Second leg on this is that it should go to back 23% line and make the turn. So it went down to 23% line and posted a bullish reversal candle and start to go up. Now what? Now for a Girdley pattern to finish, we have to go to this level, 78%. Right? So we have to be coming here. This area. So that would be 61, 23, 78. Right? Just like this one. 61, 23, 78. It's just that we are having something bearish and this is bullish. That's the only thing. But same thing, right? X, A, B, C, and D would be here. But this butterfly pattern says that no, if I make the turn from here, then what? Who's going to take me to the upside? Nobody. Nobody can make me there, right? So I'll go down. I'll dive. Right? So, that will be X, A, B, C, and then D here. So we have both scenarios, but what is the guarantee that which way we're going to go? We're confused now. So the only thing that moves the market is we know that it's news. We wait for the news. whatever kind of news is. And then we also watch the index, what the index is doing, right? And after the news, when the indexes start moving in a certain direction, we then know that pair is going to go in that direction. If pound news comes out and it is bad, you're coming down here. If pound news comes out and it is very good, you're going up there. And you jump on the 20-minute chart and you look for your setup, or at least put the alarm on and wait for it to beep. And when it will beep, you know exactly what it is. But if it's a pound bad news comes out and it is going to the upside, there's something wrong, right? There's something wrong. We are missing something, and then you just reevaluate that if yen has to do something with that, right? If maybe yen is getting way weaker and it's going up again, even though pound is weak, but pound yen is going up, means yen is getting more weaker than pound. That's the only reason, right? So you look at the pound index and yen index, just like what we are doing here. You do the indexes. The beauty about doing the indexes is that if you do the indexes, not if let's say pound index, you did all this mumbo jumbo on pound index, so you're taking care of the pound yen, pound Aussie, pound Nosy, pound CAD, pound USD, all of that. The analysis becomes easy. That pound index analysis you can use in all of those pairs. Similarly, if you're doing yen, not only pound yen, but euro yen, USD yen, Aussie yen, this yen, that yen, you can use that analysis over there. So put that on the side in the index. When the news comes out, good or bad, pound, bad news, boom, pound, good news, goes up. Simple as that. And you look for your 20-minute setup. You take the setup and you go. That's how easy it is. Right now, see, again, when you look at it, any pair on a 40-minute chart, it looks like that, man, that's, nasty. It's going up and down and up and down. It's just chaotic, it's like ranging or something weird kind of correction. But when you start measuring, you will come up with some sense that, yeah, this is making a certain pattern. It is always making a certain pattern. It's just that we have to find out and prepare yourself, find out, see what it is, and see that which way we start to go and where we are going, what is the next step. Now, this pair, it has done already that, point C. In this case, if you pull the fib from here to here, it is going for point D here. And if you look at this way, then X, A, B, C are done. You are going for point D in this way, right? Now, in this way, if it is going to the upside, for example, here, we're supposed to go there, right? But if you pull the fib from here, will it go in a straight line? No. If it is going to the upside, if pound good news comes out, and if it goes to the upside in a straight line, then you see that this is right now at a 50%. It might go to 61% or 78%. You have a nice level here, right? So it might go to 78%, then drop to the 38% line, which is right there on this level, and then go to where? That would be what? 78%, 38%. Then anybody? You just saw it, man. 78%, 38%, 78% here. If it decides to go up, then we'll go up here, 78. Then it will make the turn, or go straight. Both are possible, both ways, right? And then comes to 38, and then go to 127. That I didn't touch that. With this girdle was 127, but this butterfly is also the same level, 127. You understand or lost? You like, it's a pattern within pattern. A smaller pattern It's finishing the bigger pattern. See, well, this is 78%. Exactly the same place where this pattern, 127 extension, this butterfly pattern. So bigger pattern is Gardner pattern, but a small butterfly pattern will be finishing up the bigger Gardner pattern. Basically, it's like wave 1, A, B, C, wave 2. That's it. Elliott wave, 1, 2. That's what I said. It's 1, 2. But within those Elliott waves, every turn that is happening, you should be able to trade. And this is how you have to be, working or analyzing everything. That these are the turning points where usually, price regard the fib and makes the turn. So if you know ahead of time, for example, the Gardner pattern target 78% is there, and it goes up here and then it drops here, then you know exactly that it's going to bounce. If it bounces, it's going there definitely. Right? So if it stays above this, that would happen also. The other thing to understand is that, is the fundy helping us? Is it in our favor? Do we have a pound positive news and pound getting strong? If yes, and you see that it goes up here and then come back here and then it's bouncing, then definitely it's going up. So all you got to do is then go on a 20-minute chart, put the alarm on, and then watch TV, right? And when it beeps, just open the trade. Simple as that. Now, if pound bad news, this thing is not going to go here. It's going to give you a reversal candle here. And then you see the news, you say, it's a bad news. Now it's not going there. It's coming down here. So it may just drop here straight in a straight line because it already wobbled here. And then there is no need to make another pattern here. It is going to come down straight in a straight line. So either way, you have the roadmap prepared that if it goes to the upside, how the heck this thing is going to go to the upside, in what fashion, and if it is going to go down because of the fundy, bad fundy, then how it's going to go down. And simply, this is a 40-minute chart. You jump on the 20-minute chart once you see that, and that's it. Now, if you prepare, let's say 4 or 5 your favorite pairs, and you go and prepare charts like that, right? Another chart we did, what was that chart, Ranjit, if you're still there? What was the other pair, man? I kind of forgot. Yeah, okay, yeah. I asked him, he says, give me the random pair, and then he gave it to me, So any random pair you can pick, you will find these things there. Market is very calculated. It's just we have to find out. So this is what is cooking here. Right, so I'm going to save this because I'm going to make a chart out of that too for you guys later on. Save profile, GJ. Right, now let's go and take a look at EA. Any question, anybody so far? Now, this is what I come up with the EA when I was doing this one-on-one with Ranjit here, right? So he gave me this second pair, says, okay, let's do the analysis on this one. And I'm just going to go over fast on this one before we lose the whole time here. So again, we pull the fib from here to here, and then we have just a small move. So it's nothing. It's just nothing, right? So it's useless to pull the fib from there. Then I pull the fib from here to here to see what the heck is happening now. What's cooking here? Then we notice that, you see this? It is also at 78%. Now, after 78%, what is the recipe? Is it a lasagna or a pizza? It's a spaghetti, right? So we see that, yeah, this 78% is lasagna, right? So, okay, we go and then see where the lasagna is right there, 78%, right? Point B, 78%. Goes back to 38%. Okay. So if this is the pullback to 78% and now it's going up, so 38% is this area, which is exactly 55.35, which is exactly this monthly low 55.35, which is right here, 55.35. Right. So we have that number here in our mind now, that if it is going to the upside, for any reason, for euro is getting strong or Aussie getting weaker. Right now, Aussie is getting weaker, by the way, right? So if Aussie gets weaker a little bit more, it will go somehow, it's going to go up there. If not, then we have a level here as well where it hit and stopped. Where monthly low 54.93, right? So like I said, that Forex is not always 2 + 2 = 4. It is, most of the time it is 2 + 2 = 5 or 2 + 2 = 3, something like that. So you have to see what is cooking. Now, if we get the reversal candle right here at this level, we can consider that this point C, and if it is going down, then from 78%, whatever it is, and then it's 127. D point goes to 127 or 161 if it is going down. If you have a reversal candle here, that means it's going down. Maybe not, right? Maybe. But then what is the confirmation? The confirmation will come from 20-minute setup, short setup. So once you see a reversal candle here, and if you keep posting the blue candles, you know where the heck is going, right? And at 55.35, you should get a reversal candle. If not, it may continue to go to the upside. Market can do whatever. It depends on the fundies. And nobody knows what the fundie is going to come out tomorrow or tonight, right? So after the fundie, watch out. Good news for euro. But if you look at the euro index, you will understand what the heck is happening. Euro index, let's say, I have it here. Oh, no, let me just show the other side here. Euro index, where the heck is euro index? Okay, euro index 40-minute. This is what it's doing. So it's dropping. How the heck this pair is going to go up when it's going down like that, right? Broke the TL, dropping powerfully. And the monthly chart is this. Weekly chart. So weekly chart, I made this that is going to drop from here to there. And it already did. Look at this current week candle. It's all black. So it is dropping, right? The only thing that's going to take this pair to the upside, Euro Aussie, is probably Aussie weakness, or maybe somewhere here is going to make the turn. And then Euro continue dropping, this pair is going to drop. We know now that it's going to drop. And it will drop all the way to 127. That's at least our calculation of a butterfly pattern, right? Maybe not. But my question is that if it starts dropping here and somewhere here, you get a 20-minute entry, let's say 53.95. So let's say 54. Around 54, you get a short entry. You're supposed to go here, which is 50 to 50. So that's 150 pip to the downside. Look at the daily range. Look at your entry point, where it is, and how much is the left over the daily range, 100 pip, 120 pip, 30 pip, whatever, and take it to the downside, to this level. Or the next day, we might just continue dropping all the way to 161. It all depends on the fundies. If Aussie start getting strong again, yes, it would take this thing all the way to the downside. Now, another thing is, look at this one here. This is just pulling the fib from here to here. That we come up with this, that, first it need to go 38%, right? According to the perfect butterfly, and then start dropping. That's one thing. But what if we measure this length? Can we see something different than what really happened before? You got to see that, what has happened in the past and what is the possibility to happen in the future. Now, if you pull this fib, then you notice that this touches here 50%. Now, 50% is the recipe for what? Tell me. Anybody? John, Anjit, Vikram, Rayan, anyone? A bad pattern, right? So a bad pattern finishes usually at what level? Bad pattern, D point is where? 88%, right? So 88%. So now if you see this 50 and then the price dropped to 23% line, again, same stupid thing coming up again and again. I tell you, the 23% line is the gold mine. Got to pay attention. See this 50% drop, then it goes to 23% line and goes to 88%. That's a bad pattern, right? But Gertley stops at 78%. It doesn't go to 88%. Stop at 78 and then react. Now here what happened? 61, 23, and it is stopped at 78%. It's supposed to go here 88% to make a Gertley bad pattern. But this calculation at point B is for bad, and this is for Gertley. That's where my Gertley pattern comes in, right? So this was a Gertley pattern, and look at the reaction of that, right? So the Gertley pattern, last leg, 23, pay attention to this. This is very important. From 23 to either 78 or 80, whatever, you measure that length for the next pattern. So you see that it came all the way down to, it was 78% of this, right? We already checked it. So now you measure this last leg, which is from 23% line to this, and it's coming down now. So you see that you have something else cooking now here. So 78%, now it might go up here. Now, if you look at this all the way from here, then you see that you touch 61%. And for that, you still have to go back to 23% line and then come to 78 to make a Gertley pattern. So it's going up and coming down here. The other way, going up and coming down all the way here. So if it goes up here or a little bit higher even, and it's coming down, that's where you want to get in. Right now, you know, the euro is showing the sign that it is gonna get weaker badly, right? And for that weakness, we'll take this pair to the downside. So we are interested in the downside, not the upside. So, and right now it is posting blue candles, is going up. So we're not interested until it start to go down. And hopefully it will go up here and then start to go down. So you can get in there then. So basically what we got here is how we're going to do the analysis for any pair. You just, you know, roll up your sleeves and then you come the volume time and says, okay, let's do some trading. And you open it, you know, pair, any pair you want, or you probably heard the news that, you know, this happened, that happened, you know, pound or Aussie news or CAD news or something, right? Some news coming from Russia affected CAD. So you open those pairs and then you start looking at that weekly chart, monthly chart, see what it is, what my bias is, you know, what I'm telling you is going to go up or down or what it is. And then open a 40-minute chart and start doing the analysis. The last leg first, pull the fib, see what happened. Then the second leg, then the third last leg, then the fourth last leg. You will see picture getting more clearer and clearer and clearer and clearer. And you will have the both, you will always come up with the both scenarios. Both means upside and downside, right? But a lot of people like scratching their head, like, what the heck, you know? So what kind of analysis is that telling me that either it's going to go up or down? So everybody knows. But it's not that. It's that you are prepared that if it goes up, what action you need to be taken. And if it goes down, first, why it will go up or why it's going to go down. We know that. Second, if it goes down, what we're supposed to do. And if it goes up, where it's going to go and what we're supposed to do. Now tell me how the heck any pairs can get out of your grip, your grip, you know, from your hand. Nothing is going to go out of your hand. Everything will be under your feet. Anything, any pair you open and you see that, you know, this is what's happening. Okay. Upside is this, downside is this. All right. So let's see what kind of the entry I'm going to get at volume time, right? Like London session, for example, right? So in London session, the volume comes in and you have this thing ready, and then 4 o'clock, 4:30 Eastern time, the pound news comes out, right? All you got to do is sit down and see that, you know, pound news, good or bad. And whatever it is, a 7-minute chart will show you the way that, yeah, I'm getting strong. So all pound pair gonna go up. So you choose the upper scenario. You don't have to choose. The price will choose. And then it will go up. And then you're not gonna see the short setup. You will only see the long setup. But at least you will know exactly that this setup is because of this reason. And this is it is going from, and this far is gonna go. And I'm not gonna close my trade of 30, 40 pip. I'm going to hold on because the daily range is still like 100 pip, 150 pip, 130 pip away, or 200 pip away from my entry. I'm going to hold on to it. So, it on a comfortable target, let's maybe 100 pip. Yeah. Even if it wants to go 200, who cares, right? 100 pip, 120 pip, enough. Then get out. But not on 30 pip, 20 pip. Right? These pairs have a big daily range. So if, for example, if this scenario is going to play out after the news, it goes up here and then start to come down, and you get your entry is like 54.93. Let's say you get at 55, you get a short entry here. So from 55 to 52.50, come on, you have this much target go, and this pair can do this. From here to here. Look at from here to here. And then going from here to here. It's a piece of cake for this pair. Can do that all the time. So if we start going down, first we're going to go up. And even if we don't, any short scenario here is, 40-minute short setup or not. Reversal candle, look on the 20-minute chart for the setup. You get one, get in. Take the setup without any hesitation, and then ride. Don't close your trade 30, 40 pip. Never do that. Take your chances. Sometimes, it comes in the last 2 days. I have several that keep coming back and hitting my SL at break even. But that's the market is doing it. I'm not doing it. Right? But when the market wants to go to 200 pip and we close at 40 pip, that's not nice. Okay. That's not good. When market is giving us a chance and we says, nah, we don't want it. We don't want 100 pip. We want only 20 pip. That's no, don't do that. Just keep, learning about the daily range and do your calculation. Your entry is here. How far? The daily range is here. Okay, so your entry is here. So you from here to here, 150 pip. All right, so I'll take 130 and get out. But you get entry here, and from here to here is only 100. So I'll take 70, 80 pip and get out. Something like that. Right? And very close there, I don't even bother. It's a 30, 40 pip chance. No, I don't want to take that. The hell with it. When it's going to bounce, then or go someplace else, some other currency. Every day, they schedule news for different currencies, right? So every time the news comes out, that currency pairs, several pairs start moving and start giving you the setups. So you do this analysis as a homework. I give Ranjit, you do that, and you're supposed to give me the charts, okay? Get it? Something like that. Tell me the upper upside is this, downside is this. This is the pattern, and this is the Elliott wave. We're not even, counting the Elliott waves here. Just the pattern, just the fib mumbo jumbo, Fibonacci. That's it. That usually it does this and that. So we know 90% of the time. If it is 50%, then it goes back to 23%, then it goes to 88. If it's 61%, it goes back to 23 and then 78. If it is 78%, then it goes back to 38 and then go to 127 and 161. These numbers, just remember that this is what it always do. The price always does that. And then whichever pair and wherever you are, at that time, it's a point A, point B, point C, point D, or X, A, B, C, wherever, and from there, find the next target. Where is the next point is, and trade in that direction. Then you will be able to do or trade any pair in any given time. But the only condition is that if the pairs start moving, or it is moving, then you can trade it in the right direction. Even if you get wrong, what happened? What's going to happen on the Euro Aussie? I showed you the Ranjit. Remember, this entry, this entry, this entry. All three, either you make some money or you get out positive. I mean, at break even. Like, for example, this one, this was, from here, you close your trade here for 70 pip, or you come out at break even. Simple. What did you lose here? Nothing. What did you lose here? Nothing. What did you lose here? Nothing. So most of the time, this will happen. Sometimes, yeah, you will, your SL will hit for 15 pip, 10 pip, 15 pip, 20 pip, like that. But most of the time, if you get the entry, it will go in your direction a little bit, move your SL a little bit. And after 30 pip in your direction, come and sit on a break even, and then it wouldn't bother you. But timing is also very, very important. Don't try to trade in Asian session when there is no news schedule. Every entry you're going to make is going to go wrong, to be honest with you. Okay. So just go to sleep or do something else. Don't bother looking at the charts. But on the volume time, London session, there is a news. Watch the news. Watch the reaction after the news. And if you have done the homework, the key is to do the homework on a 40-minute chart. Look at these pairs and then draw these lines. Like I said, that this is what it is. If this goes here, this is going to go this way and makes the turn. If it doesn't, then it goes to the TL. What the hell? We don't care. In the volume time, if it is going up, you want to take a chance. Yeah, go long if you find the setup. But be ready that you might just get stopped and make the turn of 55.35. Either you're not going to lose anything, you're going to come out at break even, or maybe you lose 10, 15 pip. So don't be afraid. Let it happen. And then if it makes a turn, now you know that it's going down. So go with that. And then pull like 100, 150 pip trade. That covers your 10, 15 pip loss. And then make you a lot of pippage. Okay. So they just wanted to cover this while we are waiting for the setups and the market to move. So this should benefit you guys a little bit. Open the 40-minute charts and start counting like this leg, measure that if you can find something. Only pay attention to these three pairs for now: bat, girdle, and that butterfly pattern. And then see if you can find these calculation in 40-minute chart and mark these numbers, lines, that this is, if this is the one, the 78%, then 23% or 38% is here and 107 here. If you look at this, then you have this. So to the upside, these are the targets. To the downside, these are the areas that it might go. But when it start going, and why it will start going is because of the fundies. So pay attention to the fundies, either Bloomberg or any other CNN, whatever you watch, the Forex Factory, you have an economic calendar all over the place. Just look at that and pay attention around the news. And after the news, just watch what happened to your calculation, which way it's going, and pull the trigger from there. Any questions so far from anything? Any difficulty? You understand something? You don't understand nothing? Ranjit, you said nope. That means you don't understand it. No, okay. I'm joking, man. I know you got it already. Anybody else? Any question at all? Just prepare few charts, few pairs. Only take 4 or 5. Go on a 40-minute chart. Start pulling the fibs. Draw the horizontal lines and the numbers from the weekly, monthly chart, and see that if this is the pattern, it's a 61%. Now it's supposed to go to 23. It already gone. Okay, no problem. Then it's supposed to go to 78. Is it going? Yeah. Okay. Or about to go? Okay. Mark that. That is a possibility. The other pair maybe 78%. Okay. From here, it's supposed to go where? 38. Has it gone? No. Okay. So mark 38. Then it's going to go to 38% and then go to 127. Okay. So just have these ideas, mark the charts, prepare the 40-minute charts, and then you will see the magic. When the market moves, start to move, you will see how it moves. And in few days, you understand the whole game, that what is happening. All right. So I'm going to close it here and send out the recording. Watch the recording. Check it several times. Okay. Oh, man. And hopefully I'll talk to you guys later. All right. So no questions. I'm going to close it. All right. So bye for now and talk to you guys later.